Hi, Howard Friend, HF Systems here. Not a whole lot has changed over the last day or two since the last update. Markets just choppy, corrective upside action for a lot of them, looking for downside trigger levels for a lot of these kind of risk on markets. So kicking off as always with euro dollar. Seeing sideways activity, we saw the corrective bounce from 103.591 and stall at 106.015, ahead of broken support 106.273, and also just below the falling 20 and 50-day moving averages. So choppy action over the short term, looking for this thing to break through 104.443 to give the kind of impetus for another crack at 103.591 in a resumption of the major downtrend. On the upside, got a slightly lower trigger level now for short-term buying. That comes in now at 105.827, yesterday's high. That would put pressure, if we were to break through it, on 106.015, the swing high so far, the corrective high, above which then we could start to see a more sustainable recovery for key levels up at 107.741, 107.87. Moving on to cable, sterling dollar, similar kind of idea there, except perhaps we're seeing a little bit of underperformance on sterling today. So corrective bounce from 119.336, stalled at 124.065 a few days back. That's ahead of broken support at 124.298. Also ahead of the falling 20-day moving average. 20 and 50 are both falling, and we're underneath both of them. So it all looks to be a bit of a bearish picture. I was looking for the break of support, which comes in at 121.726, which we've seen today. Looks like we've got the trigger there for the breakdown, a resumption of the major downtrend. So looking for another crack at I guess initially psychological 120 and then 119.336. On the upside, the bulls would really need to clear yesterday's high, 123.242, and that would suggest a little bit more stabilization, putting pressure on 124.065, the swing or recovery high so far. But we'd need to see it back above that level to suggest a more sustainable recovery for 125.995, 126.669. On to dollar yen. This one, going back a couple of days, I identified a kind of a shallow corrective pullback, looking for it to blast into swing highs, which we got yesterday. So we broke through that 135.576 swing high. Looking for push to the 138 zone. So from here, I don't think the dips should be too deep. Maybe limited to 135.576, the previous swing high, and maybe at a push 134.679. Long as we're above there, favoring the upside over the short term. Should we lose 134.679, that would suggest upside failure above 135.576, and then we're talking about a pullback into the previous range. Key support sitting at 131.489. Need to fall below that level to confirm a more serious reversal in trend from up to down, and that would then target 126.362. On to gold. Always believe in your soul. So gold, again, compared to the euro dollar and cable, we saw quite a strong corrective bounce from a recent swing or trend low, 1805.13. That stalled at 1857.56, and we've subsequently broken down through the trigger level, which I was looking at, 118.33.68. We broke through that one, and that for me signals a resumption of this downtrend. I'm looking for this thing to attack 1805.13 and push below that to see sub 1800 levels. Buyers, bulls would need to clear 1846.15 to suggest a bit more stabilization, although the key level is 1857.56. Above there, then we're talking about 1878.91, and above there, we're talking about the 100-day moving average, which today comes in just above 1890. On to crude. Crude oil, that one, the powerful bearish outside session a few days back, that for me really turned the trend from up to down. It signaled a bearish trend change, and I was looking for the corrective bounce which we saw to stall in the 110.07 to 114 resistance window. Well, what happened yesterday, the market topped out at 110.81, and today we've started to see a resumption of this downtrend from 121.52 to new swing lows, which is what I was looking for. So essentially looking for this thing now to break down towards psychological 100, settlement below there, then we're talking about 93.741, which is quite an important support level. On the upside, if we can get back above 110.81, that would start to stabilize the market. But I think 116.30 is really the key to a resumption of the previous major uptrend. Okay, moving on to S&P. I guess similar to crude, where we saw big breakdown, nice rebound. I was looking for the thing to top out in the 3700 to 3841 85 resistance zone. We actually topped out at 3782.85 yesterday, and today we're starting to see a bit of a breakdown. So this looks to me like maybe we've seen the end of a bear market bounce, and that we're going to have another crack at the swing low 3638.10. Below that, we could see this thing head down into the 3500 barrier handle before we start to see another basing attempt. On the upside, if we can get back above yesterday's high, then that would start to suggest basing potential. But 3841.85, the previous reaction high, I think we need to really clear that level to suggest a more sustainable bounce. And then we're targeting the 20 and the 50-day moving averages, which are falling. Finally, Bitcoin. Bitcoin, just shallow bounces, just sort of bumping along the bottom around this psychological 20,000 area. Don't see too much in terms of upside action. Still looking for 21,000 to 22,954 to pretty much cap prior to breakdown through the swing low towards the 18,000 level. On the upside, really want to see this above 22,954, the last real reaction high on the way down, and that would start to suggest basing. But broken support, the old swing low comes in at 25,330, so that would be an interesting place to monitor. Thanks very much, and further updates will follow in due course. Thanks.